Blackham Resources has released a positive definitive feasibility study for their Matilda Gold Project, which is located in Wiluna, Western Australia. Overall, the results of the DFS slightly exceeded our expectations on a number of key measures. The highlights include increasing the project's mine life to more than 7 years, which is a 2-year increase compared to the PFS, a reduction to Blackham C1 operating costs and confirmation of the robust all-in sustaining operating costs, confirmation that the initial capital costs will be one of the lowest in the industry for a project of this size and scale. With these factors combined, Blackham increased both the IRR and NPV for the project, whilst confirming a rapid payback of just 1 year. This has resulted to an increase in our base case valuation from 46 cents up to a revised price of 87 cents per share. The key drivers for the change in our valuation was an increase to our mine life and gold price assumptions. The operating costs, capital costs, and metallurgical recoveries were largely in line with our previous estimations. However, to test the project's sensitivities to costs and metallurgical recoveries, we ran a number of sensitivities as shown in the graph. And even on the double downside scenario, there is still a significant premium to the current share price. As mentioned, the major driver to our valuation was increasing our mine life assumption to 9 years, or around 180,000 ounces more than the mine plan outlined by Blackham. We feel comfortable with this assumption, given the recent exploration success, some of which is not included in the current mineable resource, as well as the aggressive ongoing exploration program. We have been particularly encouraged by recent announcements regarding the potential to increase the base load at both the Matilda and Williamson open pit deposits. We see both of these deposits as important factors to increase the operation's mine life past 10 years. In addition, Blackham also increased the number of underground mineable deposits to 3 and brought more sulphide gold ounces into the mine life compared to previous studies. As we have previously stated, given there is already a BIOX facility at site, the high-grade nature of the sulphide deposits, as well as the significant amount of underground development that is already in place, we believe it makes sense to bring these sulphide deposits into the mine plan sooner rather than later, as it can be done relatively inexpensively for significant gains, especially in the current gold price environment. And whilst we have only slightly increased the tonnes mined compared to the DFS, we have increased the average grade mined to 5.7 grams per tonne over the life of the operation. We feel this assumption is appropriate given the exploration results to date, as well as the historical grade mined was up to 9 grams per tonne, which highlights there is potential for the grade mined to surprise further on the upside. We therefore examined the effect on our valuation under a range of different underground mine grades. We note that for every half a gram per tonne change in the grade, our valuation increases by approximately 15 cents per share. The other key change was increasing our gold price assumption to 1,655 Australian dollars per ounce. We however note this is lower than the current gold price, as well as the average price during the past month. However, given commodity prices can fluctuate, we have examined a range of different gold price scenarios. We note that for every $100 per ounce change in our gold price, our valuation changes by approximately 17 cents per share. And finally, we believe there are a number of catalysts in the coming 6 to 12 months that could see the gap between our valuation and Blackham share price decrease further. These include continued exploration results from all deposits, which will be followed by a reserve and resource upgrade prior to first production, first drawdown of the senior debt facility, a potential announcement regarding gold hedging. We believe this would be a sensible course of action given the current high gold price, which could be locked in, especially during the initial debt repayment period. And finally, first gold production, which is due to commence during the third quarter of 2016. A PDF version of our valuation and financial forecasts is available at the Sophisticated Investor website by simply clicking on the link.